The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 17th of December. Wow, not many days left for the rest of the year for the market. We're looking at, let me just show you, this is the SMHs down $1.87. The 9-period moving average is very close to turning down, to turning negative. We're going to be watching this. So let me go through the numbers. We're looking at the Dow up 266 at 48,376. This is nice action because this is a peak C. I'm anticipating a leg D above 48,886 over the coming days. And we'll see what happens. Look, it's walking the 9-period moving averages, going right into the Chapman wave inside track repellent zone. And that just says, what does it say? It says that if you don't watch the this pink repellent line closely, you might miss something, because that has been where the market, where the Dow has turned on the weekly basis since it became a channel of importance way back in July. And this diagonal trending line, which is about, 26%, maybe 25% moving up, that's been resistance. So how we get there is going to be important. So I'm anticipating that there's a cross current going on. We spoke about just when I did the update. There's a bifurcated market right now. Dow's leading. And we're going to be watching this because I'm suspecting we might even make just a peak C1 and not make a new all-time high by at least this week. Maybe I have to consider it as a peak C2, and then we have a bit of a pullback. But in the meantime, the technicals are still strong. I'm anticipating there's no reason why, with these good technicals, although the stochastic did dip under 80% to 77% in the daily chart, that we don't go higher. And for my webinar last night, where I discussed the outlook for 2026 and what's looking good, it was really important. I managed in the 90 minutes to cover almost every single thing that I had written up and prepared. So I'm very pleased about that. I think on my part, I think it was a successful webinar in that it really explained why there was a good reason to anticipate higher highs in 2026, and a lot depends on this, on the outcome of this 36,661 low back in April for the monthly chart of the Dow, going all the way up, and it's still in a leg A. Now, here's another thing that I needed to talk about. Let me go through this. The S&P failed. It made a little arch formation under the 69.20.34 29th of October high. It failed. It got to 69. Was it? Did it hit 67? No, it went 69.03.46. Now it's pulling back. That's going to be a bit of a struggle to get to at least a recovery leg D. So I'm just looking at this and saying, okay, the 9-period moving average is strong. Today we closed quite negative. I mean, I have to say that that becomes pink, and all the other technicals are negative. We could take out yesterday's low of 67.59.74. That makes a rally later in the day, and this is what I said to subscribers to my opening call this morning. We might have a bounce, early weakness, but after 1:30 going into 2 o'clock, you want to see the market come back. The Dow is doing what I want you to do, but that's not, at this point, I want the S&P to also, instead of being down 4 right now, down 5, I'd like it to be at about a +7 or +9 coming into 2 o'clock. I think that'll be much better. All right, looking at the QQQ, 1, 2, 3, there we go. That's the NDX 100. Trading vehicle down $1.55 at 610.19. Now the 9-period moving average has gone negative, and it failed to take out the 637.01 October the 29th high. It went to 629.21 just over a week ago. This is going to be something, and I drew this in for the weekly chart, that there's a peak D in the weekly chart from the October high. Then we pulled back. We came down to 580.74. Now we've routed, and the rectangle is one of the techniques that I described. This is the large rectangle. It's making an arch formation. I do not want to see 605 hit by Friday. That'll be very negative. This so far, the 9-period moving average is positive in the weekly chart. All the other technical indicators are negative. So now it's up to the 9 to show some support, to be able to get the cues to get back over the 9-period moving average into the 616 area. That's 6 points high. That's a bit of an ask. Okay, IWM, the Russell 2000, small caps, nice. Up 2.04, 251.93. Remain along this for a couple of weeks now. And what I am looking at is, that was a peak B. I really can't make any other notation for that. It's a peak B, and I'm anticipating 258.21, hopefully by the end of the year, to go to a leg C at least. And the weekly chart is still holding very well. Even the MACD remains positive. The relative strength is good. Stochastics at 80%, watching that because it looks like it wants to dip lower, but it hasn't yet. And the on-balance volume is good, the blue line. So far, these technicals are good. Weekly charts already in leg B, and I'm going to go to the SMH real quickly. SMH is the semiconductors down 3.3. At 348.71. Now the SMH made a new high, 375.59. And yet this pullback is way sharper. This is the kind of pullback you expect if you made a D or something like that. I have to respect it. It looks like the 9-period moving average is real close to turning down. And you can see this market, they're just flurries of buying where money wants to come in, but it's not able to hold. And that's very important at this particular time. So I'm going to do this. I'm going to say that now this is different. Each one is a little different. Look, this is a peak E in the weekly chart back in October, pulls back. In November, it makes in December, it makes a new high in the weekly chart. I have to call that an F because there's no instant restart, even though within 2 bars it went to a higher high, because this sharp peak E and a pullback way below the trough of D, that just says, I got to respect that. Now, you could go sideways, and that's really what I'm thinking. So the SMH is semiconductors, leg B in the monthly chart, but wow. This is a potential for a peak F. I'll do this just to show you something very interesting. So look at the technicals here. Hopefully I take this away and say, false indicator. Look at this. The 9 over the 14 is still very strong. But look, the MACD is much lower here than it was at the October high in the weekly chart of the semiconductors. Look at the relative strength. It's much lower. Look at the stochastics at 76%. Not bad, but not great. I love it over 80%. On balance volume is pulling back. So I'm just saying there are technical areas in the semiconductors that are not all in sync in terms of showing strength. They're more likely showing on the shorter term some weakness. So let's make it as simple as possible. 349 right now. If the semiconductors any time in the rest of the month close under 339, I have to respect that it's going to take a lot longer to come back to all-time highs, maybe quite a few weeks. Okay, let's just get that out the way. And I hear music, and TLT is trading down 10 cents at 87.77. So the TBT, that's the inverse, that's the yield basically, is trading after that leg D yesterday, possibly at a peak D. You're going to be watching this very closely. Dow's up 222, S&P's down just $1. We'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So we'll get back to our story in a moment, but the question came in, could I look at Iovance Biotherapeutics? So this is trading at $2.50, up 25 cents. That's a big percentage, over 10%. But, of course, as Tommy always says, don't be fooled by low-priced symbols, because percentages they vary greatly, and you can be deceived by them. Okay, so this is now doing very nicely. 9-period moving average is just as we're talking about to cross positive in the daily. Oh, it's just, I could have looked at this and said, ho, biotech. You can just see these long wicks, and then the body is closed towards the low. It just keeps doing that. But look at the weekly chart for the first time. Oh, for the first time in, is that the first time? That is the first time in, I'm opening, oh, look at this. Peak A, B, C. Look at this. It's trading in October of 2023 at about $2.40. It goes all the way up to about $17, and then comes back like a pyramid. Well, actually a bouncy, but it looks more like a slalom. It comes down to, and then it comes down to most recent lows in maybe the twos or so. Okay, I just want you to open it up to see. Oh, what I wanted to say is this is the first time since it was right there, November of 2024. That's a year ago. It was trading in the tens. And then since then, it's come down to a low of about $1.64-ish. Okay, so that's what I wanted to say. So in over a year, this is the first time that the weekly chart has gone green. That is a really good sign, but it's a weekly chart. We've got to wait until Friday is close to see if it holds. But what I am looking at, look at this rising trend line. So the base of support, now it is biotech, that could change just on a dime, right? But look at this base of support. Chapman Wave inside track, I spoke about about this last night in my webinar. I was really very pleased with the webinar. If you're interested in my newsletter, I think you'll get a lot out of that. It covered so many things. And I managed to cover a tremendous amount in 90 minutes, as well as charts of stocks that we're very interested in for this coming year, or we already have that will be added to. So look at this. So this means that's the low right there. So it goes peak A, peak B. Once this up arrow is in place, all the peaks get counted, right? That's your obligation. That's an A. In fact, it should be gray because it's under the previous. I'm not going to change the color. But this is an A, that's a B, and that's a C. The way it's looking right now, if it's able to get over the high that was made back around the 10th, was that the 10th? The 11th of November, the high was 274. If it's able, because it's a weekly chart, it doesn't have to close. But if it's able just to pop 1 penny above that high of 274, go to $2.75, that weekly chart becomes a C. But look at the way the MACD has been building strength for ages. Look at the relative gray line in the weekly chart, the relative strength. Nice action. Look at the on-balance volume. Very good action. Look at the stochastic. Not all that good. So I need the stochastic to be moving higher. If it does that, I'm sure the stochastic will get close to 62%. That'll be much better. I would like 80%, but that's not going to happen just yet. So this is very positive. So I've discussed the upside, because once it breaks that, the next target would be 285. That's the high of the week of the 22nd of August of last year. Okay, the monthly chart. Don't even look at the monthly chart. If you on board ship, you'll be looking over the railing at the ocean and giving the sharks a lot of food. All right. So all I can say, just absolutely horrendous monthly chart. The weekly chart is also terrible, but that big spike on news and the inverted Chapman wave Roman candle where it took out the lows instead of taking out the midpoint at 370, it came down. That is the reason why the MACD has been helped so much, because it's a look-back period. So all I can say is, I've given you the upside. Look at the downside. The downside is that the 9-period moving average at about 231, that's like a magnet. So you want to see this thing pushing away is up 24 cents, 23 cents as we speak, in 24 cents. Give me 25 once, 25, no, 23. Okay, if we can get to that 262 level and then 268, that'll be very, very positive. But the downside is you don't want to crack the 236, 230 area. That's all. You do that, you're just stuck again waiting for some news. Something's happening here that is quite positive. It's shown up by today's action, and you've now got yourself an H pattern that's gone to a cup formation, and that says to fulfill the upside obligation, you don't want to take more than a bar or two of pullback. Preferably you want to just be moving up. All right, I hope that helps you. Iovance Biotherapeutics, $2.48, up 23 cents. Then the next question came in. Monthly can catch monthly can catch up. You're long from the low twos. I think that's the best way to do it. And I know that you have longer-term aspirations for this stock. So in that case, I think your plan is working very nicely. Let me just see now. I had a question here. Oops, I just did something wrong. Here we go. Oh, there. There it is. So good morning, Basil. Great webinar. Oh, thank you very much. Can we look at Hood and Tesla? Thank you. Okay. So let me just move out of that, get back to our general thing. So what was it? Tesla. Okay, Tesla. TSLA. It went to a high yesterday. It's at it's at an all-time monthly high. It's in leg D. Tesla, I keep going back when it was at about 220 quite some time ago. That was about a year, April, May or so at the lows. And I remember hearing, and now, of course, I always forget his name. I can just see the picture, two vowels, Ron Barron, talking about Tesla. And was down there, and he was questioned about, you've been holding Tesla, you got millions, you've been adding to it. What are you doing right now? And he said, I'm holding it forever. I am along and I'm adding to it, and I see it going to highs. And I'm looking at the chart, and I actually had a question from one of our tigers asking me about it in the 220 area, and I said, yeah, looking good, looking good. And we didn't buy it for some reason. I liked it, and it just didn't do anything. And here it is, trading with a high today of 495.28. It's at 488 right, 487.99 right now. Minus at 77, a little doji candle in leg D. MACD is good, stochastic is good, relative strength is good, 9-period moving average is good. Oh, man. And I was going to do a left side, right side price time match because I thought, we should be looking at this. This is the 9-period moving average. It's done great. It is done really great. I like it very much. What I am going to say is it's been independent of almost anything, and I suspect it's also got the robot cars, it's got robot this, robot that. It's just in the right area. I had a left side, right side price time match in the weekly chart at 488.54 by look, there it is. By when was it? Right there. By November, the week of the 7th, it just missed it in leg D. It pulled back and now it's higher. I'll be back in a moment. Dow's up 154, S&P's down 8. Every little bit of buying.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
I'm going to come back to Tess. I just was asked about the E-mini. Yeah, so I did this. I did this one very nicely earlier. I notated it up until that peak in the 10-minute chart of the ESH26, and then it pulled back. And then after that, I didn't. I had to do this after the fact. And I caught up at about 6 o'clock this morning where it was at that second peak D right there. But look at the 9-period moving average, how when it crossed positive at 1 o'clock this morning, how the price just kept right. Look at that 200-period moving average, how important it is. Remember, we were talking about it just a moment ago on that stock, what was it, whatever it is. That was the IOVA, I think it was IOVA. Yeah, so now look at this. 200-period moving average, it went for about 3 hours. This is a 10-minute chart, 3 hours, and then it finally broke above, pushed away from the 200-period moving average, went to peak D. And then I actually spoke about this last night, about the rectangle. When a rectangle is a long rectangle, narrow rectangle at the top, it invariably breaks to the bottom. That's exactly what it did. And look, I did this after the fact, so we were about here. So I started to do this left side, right side price time match, and I choose a particular candle. I chose this candle, and it worked. I didn't expect it to work, and I wasn't doing this. It was, as I say, more after the fact than anything else. But it did give it a pretty exact on the dot turnaround. But that turnaround is, look at that 9-period moving average in the 10-minute E-mini chart. Look how wide the 9-period moving average is. As it broke the 200-period moving average, it's going to be, there's a lot of selling going on, but it's very rotational. And that's the reason, I mean, when you get a turnaround like you did at the top about a week ago, or less than a week ago, with those different indices, you would expect powerful selling if this was a major sell-off. So I think this is what I was talking about, that it was just this choppy end of December whippy action with limited. Right now, I don't think the Dow could make much more than a nominal new high. I think at this particular point, the others will struggle to even get to their highs. But I also seeing at this particular point, just for the moment, some rotational limited downside, because the divergence between the Dow, the SMHs, and the Russell 2000 and, say, the QQQ, that's something you have to respect. So I'm just saying that this is still kind of negative, but there is some buying coming in. Let's go back to our Tesla. Tesla's trading right now at 489.15, having made an all-time high in leg D. I can't remember why I had this. Oh, this was I don't do this very often, but I wonder what that line was. It was this Fibonacci that I had as an expansion. I always try to emulate Larry's method of these expansions, etc. I don't always seem to get the right. He just does it fabulously, but I don't always get the right ones. This one was perfect. I did it because the expansion from the bottom had this perfect right there. At a 236 expansion right there. I've got it upside down. I always have it upside down. It says 618, but it's actually the 23.6%, 23.6. And then look at this, expands up, and then I had one right there at the zero. That is 100% expansion, and it went to 490.81. And what was today's high? 495.28. Oh, I'm pleased. Usually they don't work out for me. I'm happy that one, but I didn't follow it. Dumb. All right. So that's that. So I'm just saying to you, any consolidation now in Tesla says that if it closes, it's at 488 right now. A close in the next, I'd say a week from today, a day before Christmas, a close below 478 says, okay, it's going to be digesting gains. But right now it's holding really well. Okay, with that said, I'm going to go to, Robinhood. Robinhood right now trading up 3.51. It's had a very big pullback from the, I should mention we are long, from 140 down to where it is right now at 122. Intraday, it went to 124.70. This is trying to find some independent strength. I'm a little worried. I'm not a little worried. I'm more than a little worried because for the big move up going into the October-November highs, it was a fantastic participant. It was one of the leaders. Maybe now you're looking at it and saying, with Bitcoin so weak, and maybe the players in the gold are, well, actually, Bitcoin's up $1,700 right now at 89,500. But it's made that H pattern, so I expect that if there's a rally, it makes an H to an M-shaped pattern. So maybe this is not the phase at this particular point for Robinhood until we get into, say, January or February of next year. No, I'm watching it closely. I'm not going to give it too much more room for our second entry, which is at 109. Went to Hood. First entry was in the 16s. Second entry was 109. It did rally all the way to almost 140, and then it pulled back to 112-ish, and now it's at 123. I don't want to give it too much room. This is all I can say is that the H pattern, look, there's the dreaded H in the rectangle. We made one in the weekly. Here's the second one arching over. This is the one that must say, no, I'm going to turn around and become a V shape or a cup formation by going higher. That's a big ask, but right now that's what it's doing. What I would say is any close, no, not even a close, just underneath 114.10 was the low on the 15th. 1 penny below that, I'd say let's get out. If that's what you're looking at for support, and you got in at the 109s, you don't want to take too much. Take a chunk off of that particular position and just keep a little bit. That's what I would say. All right, let's get back to our story. That is the question of where did it go? Right there. Okay. Oh, I can't see it. I'm sorry, I can't see the. I'm using a different computer right now, and I can't see Tiger YouTube. Tiger YouTube. Any question there? I'm sorry, I just can't see it, so I can't answer it today. I got another question coming. FXI. So we were talking about the dreaded H pattern that it had 2 days in which to close above the left side low. It's doing that today. It hasn't closed, but at least it's bounced. So look, the low that we're talking about in the this is the iShares for the large cap ETF, China ETF, large caps. The low was 38.15. I might as well just type it in, right? 38.15 over there. And then what happens, and that was in late November, then it bounces all the way almost to 40, and then it comes back. And what does it do? It takes out, in the dreaded H pattern, it takes out that low yesterday and goes all the way down to 37.68. Today it's bounced up. It's trading right now at 38.20. So far, it is above that left side low. That's going to be very important, because if it closes below that, has only another day in which to try to get there. Otherwise, it says 37.49 is a Georgia period moving average that's likely to be hit. There's your H to M pattern in the monthly chart and the weekly chart. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so look at this. So this is the pattern that I call the dreaded H, discussed it last night. This is the lowercase h, comes straight down from a major peak, pulls back, rallies, fails at a peak A or B, and comes out, takes out the left side low. If it holds that low or just nicks it and then comes right back, it can make another arch formation, sometimes a smaller one. If it's a smaller one, you got to watch out that it doesn't take out. That lowercase h goes to a lowercase m and then takes it out. Look at this. Lowercase h takes out, it holds and then bounces and takes out the left side low, and that's very negative. So that is now a sell mode in the weekly chart of the FXI. And what we're looking at is it's in leg C to the downside. 9-period moving average is still green. So maybe it changes, but so far that's what it is. And the MACD is weak, stochastic's very weak, on-balance volume's weak. We watch, and the relative strength is starting to weaken. All right, so that's a peak D in the weekly chart, in the monthly chart. All right, the question came in: could I look at Marvell? Yeah. So this is part of the whole semiconductor complex, MRVL. I followed it for years. Yeah, this is very interesting. Look at this, Marvell Technology Inc., semis. Look at that monthly chart. It goes all the way to a peak E at about 128, was it? 127.48 back in January of this year. Plummets down to the 47-ish area, 46. I'll give you the exact figure. 47.09. And then it goes peak A, peak, leg B in the monthly chart. Got to watch this closely, and it's a G/C in the weekly chart. The technicals here are pretty good, but that, I must open this up. Yes, so the question was, if that is a peak F, and that was a G, it couldn't be an H, so that has to be a brand new, the A, B, C. And then it's a C minus. This is unusual for all this to happen at highs and not at a D, E, F, or G. And look at this. Comes down to the 200-period moving average, has a spectacular move to the upside. I think it's going to be a singular move. And it's coming down. It looks to me like Marvell, trading at up 19 cents at 84.19, is actually going to tag the 80.35 200-period moving average over the next week or so. This is the daily chart, right? The only way it's going to change if somehow today it's the high was actually 87.18, it's at 83 right now. If by Friday or this coming Monday, somehow or other it's at 88.50, that'll be really fabulous action. But right now it doesn't look like it's going to do that. That looks like almost like a rogue wave. Eiffel Tower straight up, straight down. Yeah, pity about that, because that gap to the upside has left an island. Look at this. This is an island reversal at not an all-time high, at a recovery high. So that makes that whole gap area going to 90 really tough. Yeah, this is coming down. Talking about down, the Dow's down 12, the S&P's down 38, and very few green shoots there that I'm looking at. All right. So with that said, I need to take a look at. Oops. Look at that. Okay. What I'm looking at now is a situation where everything. Let's see what the IWM is. IWM is the Russell 2000, and it is down now, 29 cents. So this is that phase of the market that I say to myself, and I mentioned this last night, and I said, I'm not going to go there until I got signs that something else happened. And that is that this peak C right here at 48,886, I'm still calling it that, might be an alternate count. I have every legitimacy because it never took out the 45,452 low of the 14th of October on that big pullback to 45,724. So this could be a continuation pattern, E/C. I just don't want to go there. I don't need to go there. The 9-period moving average is strong over the 14. MACD is still good. Day is young. We'll see what happens. Could be completely wrong. But so far, even the weekly chart is still suggesting over the coming few weeks, we should be seeing all-time highs. So let's just leave it at that. And the other question came in. Where was it? This is a good question. And it's funny it came up right now because just earlier on, there's like one in my screamer list that was flashing. So let me just go through them in order. MITT, these are stocks under $10. It's a particular pattern that I'll look at. This is AG Mortgage Investment Trust, trading at up 17 cents, up almost 2% at 874. I focused on this a little while back for subscribers. I just showed it, and I just didn't believe that it would do it. Well, it was in the 760s. Here it is at 874. Unbelievable. Fabulous move. Leg D in the weekly chart. Leg C. It could be an alternate count in the monthly chart. This is fantastic action. Next thing is ORC. ORC is Orchard Island Capital Inc. Oh, I had already noted this one once before, but Peak C, and I haven't updated it for a long time. It did go to a weekly D, and now it's going sideways. Let me just do that, sideways. Monthly chart doesn't look too great, but the daily chart has gone peak A, peak B, peak C, and there's your leg D. So A, B, C, and there's your leg D. That makes 733 the support to 725. And right now we're looking at, this is good action. If in the next week it's able to tag the 750 level, it makes that high that was made just under in the 770s a target. I think it's going to be a little difficult to do, but right now it's acting in this rectangle formation basically in the weekly chart. So I'm just going to put this in here. It's just kind of stuck. That's Orchard Island Capital. What was the next one? Fascinating, huh? Oh, CFFN. Almost had this one today. I've already done all the work on it. Wow, look at this. Capital Federal Financial leg. It's actually a leg D in the monthly chart. And look, I did all the work, did all the homework, just didn't choose it. Look at this. Darn, forgot about it. There it is. There's the leg E. Here it is. It had the target. It's 2 weeks early on a weekly basis for the 720 level. That was the target. Today's high is 722. And there's the Chapman wave inside wedge, dash green target resistance line. MACD's good, on balance volume's good, stochastics 86%. Wow, this looks very good. This one here is CFFN. And it is, I would just say, left side, So the candle that I'd be looking at, 795, the candle of March. This is a weekly chart. March the 24th, the week of the 24th, 2023. Key support. Now let's just go back to the daily chart. Key support is between 690 and 680. Nice EF. Very good action. Next one is Galt. GMO. Is this Galt? Is this from what's Ayn Rand? Yeah. Galt is trading sharply higher. This is Gallatin Therapeutics, leg C in the monthly chart, leg D in the weekly chart. Overlapping wave. I'll talk about that when we reach it. Dow's down 12.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just Gallatin Therapeutics trading at 7.08, up 88 cents, up almost 14%. Leg D in the daily. Now look at this. So I had this as a C over there, but ever since then, I haven't looked at it for ages, that C it was taken out. So that C continues. The A and the B are gray. They get taken away. And here we go to a D right here, D. There it is, a D. and now you're in leg E. Very quick ABCD. It's one of the quickest ABCDs you can have because you've only got one bar rest in between. What a good example. So that says you usually get a bit of a pullback when you get that many quick higher highs, but it's fabulous action right now. Gallatin Therapeutics, key supports between 652 and 624. And let me just do this. I can't believe it. Didn't I say just about 2-3 weeks ago I saw Builder's First Source truck for the first time? I've always spoken about it, but I've never really seen one right outside. They're doing some construction next door, across the street. The Builder's First Source, dreaded H pattern, pulling back very sharply. It's down to 33 cents at 102.86, but it had a recent high 150, all-time high of 214. Wow. Look, there's the dreaded H, one dreaded H, another dreaded H, and let's see what happens here. So with that said, be a little careful here. We're trying to be careful, but we're also adding some positions on stocks that are really holding very well. We'll see if that lasts by the end of the day. Meantime, back at the ranch, I'm going to hand you over to Steve Rhodes. Check out my opening call newsletter and also that webinar I did last night. I think it was very constructive. It goes right to the issue of what we're looking at right now in the market. And with that said, let me just do one other thing. I had a question about it. Where did it go? Oh, GDX. Yeah, the GDX right now is up 23 cents, but it did make a peak deep. Might just stall a little bit here. Silver's been much stronger. So with that said, I'll hand you over to Steve Rhodes. Have a wonderful rest of the day, and I will see you tomorrow, Thursday.